Ladies and gentlemen, welcome to the Business Brew. I'm your host, Bill Brewster. This episode is brought to you by Stream by Mosaic. You can find them at streamrg.com. That's streamrg.com. Stream is an expert interview transcript library that's become integral to my research process. I first discovered them while researching my beloved Curate 14 months ago. At that time, they were an up-and-coming product that was focused on building out their expert interview transcript library. Well, I'm here to tell you that they have successfully built that library out. I use them all the time for background information on the companies that I'm working on, and it's been an invaluable part of my understanding of companies. This episode features David Fauchier. David joined to discuss market-neutral strategies in crypto assets. In layperson's terms, that means David trades crypto assets and quickly sells off the directional risk that he takes in a trade. I find his strategy to be very fascinating and encourage any informed listeners to reach out to discuss the risks that they may see in the strategy, because I do find this to be pretty interesting stuff. As part of the sponsorship, we're going to try to drop insights into the shows. David and I discussed Coinbase in this show, and Stream's library helped me understand that Coinbase is one of the companies that really values doing things by the book. They work with regulators, sometimes to Coinbase's dismay, and they've been described as a bit more cautious, a bit slower in their business dealings, and you can really see that in the crypto assets they list and so on. It appears as though they lean on trust to market their offerings to retail traders, who then pay substantially higher fees to trade on Coinbase in exchange for some of that AML KYC security and some security in knowing that the crypto assets that are listed are high quality. If you're interested in doing more research on Coinbase, please sign up for Stream by Mosaic at streamrg.com. That's streamrg.com, where you can sign up for a 14-day trial and get a more robust understanding of Coinbase or any other company you're interested in. Tell them I sent you. It means a lot to me to drive some traffic to them, so if you would do me that favor, that would be awesome. As always, none of this is financial advice. All of the information contained in this program is for entertainment purposes only. Please consult your financial advisor before making investment decisions and do your own due diligence. Thrilled to be joined by David Fauchier. Is that right?
Yeah.
Is it?
It's close enough.
Or is it Fauchier?
Fauchier.
Okay.
Anyway.
Well, that's
like.
important, man. I don't want to be some dumb American like, oh, Fauchier. Like, that's not what I'm going for here. So, all right. Anyway, as far as the ad-libbing, yes, I always ad-lib.
Nice.
It makes some people nervous. Makes me nervous sometimes, but more often than not, it works.
That seems to be such a mix. Like, some people will do like 2 prep calls and send you like a 5-page document of like, this is what we're going to talk through. And sometimes it's like, yeah, just join and shoot the shit.
Yeah. I mean, look, I think that the downside, is that like sometimes the conversation will hit a little bit of a lull, and it'll cause, like, I'll have to say, so what do you want to talk about next? And then occasionally I have to edit that portion of the conversation out. But I don't know, man. I just think that I'm just trying to talk to people, you know, and having like a detailed, organized plan, I always feel gets in the way of having the conversation that I want to have.
Mm-hmm.
Like, basically what
You're
I'm
very good at asking questions.
is I'm going to ask you some questions, and then I'm just going to let you talk.
Sounds good.
All right. Well, the first question, sir, is you want to tell people a little bit about what you do and your strategy?
Yeah, sure. So I work at a firm called Nickel based in London, and it's a crypto-focused asset manager. So everything we do is in the crypto space. I run a fund for them, which is a multi-manager. So I allocate to managers across the crypto space who are doing something market neutral. So typically the easy examples of that is like arbitrage, but it's also market making, relative value, statistical arb, long, short, all of the different kind of market neutral, beta neutral strategies you can think of from the traditional space, but applied in the crypto space. And previous to that, I ran a fund of funds, also in the crypto space, also focused on market neutral, called Cambriel. And before that, worked in fintech with kind of one foot in crypto since 2013 or so.
So I guess I have a couple questions. One, people that I talk to will say, well, you can't even value anything in crypto. So how can you possibly have a relative value strategy? Why don't we sort of attack that first thing first?
Cool. So there are statistical relationships between two different, let's call them coins, which you can look at and which can be more or less robust over time. So that would be kind of one way, is just a purely relative, kind of statistical relative way. That's what we do. So everything we do is pretty much statistical based, or with a deterministic arbitrage that you can exploit. So like Bitcoin is selling at two different prices on two different exchanges. You sell it cheap, you buy it expensive. You buy it cheap, you sell it expensive. We're pretty, I mean, I have my own personal views on crypto and everyone kind of does at the farm. But in terms of what we're doing professionally, we don't really have a view. I mean, this just happens to be an illiquid market with some very unique microstructures to it, which mean that prices of related assets across the space can move around a lot and dislocate. And when they do, that's effectively an arbitrage opportunity. And that's pretty much where the kind of professional thesis stops in that respect. Like there is an arb, you can exploit it, the market is liquid, it allows you to do it in size, and so you do it. And then on the kind of like, how do you value these assets? I would push back. I think that there's, crypto is software and people are experimenting with hundreds and hundreds and hundreds of different models here, and 99% of them are junk. And on the 1% that remains, there are some really interesting ways in which the token can genuinely accrue a value, and different valuation models you can apply to that. For some of these, like a DCF is absolutely the right way to think about it. Like they're literally kicking off dollar cash flows.
So, do you mind telling me, I know this is separating your professional view from your personal view, but in your personal view and the conversation that we had previously, you were telling me about how you got interested in crypto, and do you mind going back to 2013, what you saw, and maybe doing a little bit of a timeline of the iterations of technology that you were watching and what got you more and more interested in pursuing this space?
Yeah, so I came at crypto, someone sent me the white paper of Bitcoin in 2012, and Bitcoin was pretty much what was around at the time. And I came at that, I thought it was very interesting, and I came at it very much I'm a history major, so I came at it from an economic history background. And I think that crypto has kicked off this discussion a lot, but a few years ago, people have this sense that monetary regimes are somehow permanent, and history tells us otherwise. Like they tend to last 30 to 100 years, but never more. And we can go back to the 70s for kind of the last iteration of what we have today. And it always felt to me relatively precarious. Like monetary regimes do shift and change. And there doesn't seem to be any appreciation for that, at least until the last couple of years. And COVID kicked off a lot of those discussions. And so I thought Bitcoin was interesting because from a purely kind of monetary perspective, here is an asset which is just as hard or harder than gold, in the sense that it's finite and it's calculatably finite. Like we don't know how much gold there is on Earth or in the universe, but we know that there's 21 million Bitcoin and that can't be changed. And it was sort of an interesting kind of thought experiment there to say, well, is provable scarcity enough for value? Like, does that have innate value in itself? And secondly, what was very interesting to me was like the concept of money over the internet is a very old kind of problem that people have been trying to solve since the internet began. So if you look at the specs for HTTP, like what powers like web page delivery, for example, like there are, if you hit a link and the link is broken, you'll get like a 404 or something like this, page not found kind of error. And all of these errors have codes, and all of these codes are specified by the like World Wide Web Foundation. And you can look at the spec, and there have been error codes and success codes for payments since the internet began. Like an internet native currency has been a really old idea that people tried and failed to do until Bitcoin came out in 2010. So just like as an academic exercise, it was already very interesting. And then it solved some long-standing kind of computer networks problems. One of these is like, how do you have a decentralized database that you can trust? And then secure that database. And this is sort of your blockchain and your mining and your proof of work. And how do you solve a long-standing kind of networking problem called the Byzantine generals problem? Like if a change is made, how can you kind of gossip that change across the network where everyone can see that the correct change has been made and validate that this was like an authentic change? And I just thought, like, from a computer networks perspective, it was interesting.
So if you can't validate the change, is what you're sort of running from the idea of like a network becomes like Wikipedia, where anyone can go in there and change it, and like you don't know how valid it is, and what needed to be changed was.
So Wikipedia is a great example
sure that
of
it
this.
was
like,
a valid change.
Like anyone can. I know I'm simplifying here, but like anyone can sort of go on Wikipedia and change something. And sure, there are reviewers and stuff, but they don't catch it all the time. So if you go and read something on Wikipedia, you don't know it to be true. And the kind of neat thing about the Bitcoin blockchain is that when a change is kind of committed there, because of the cryptography that's used, like it's so incredibly hard that it's basically impossible to go back and change what was done. And so you have this kind of sequential statements of facts. And in the Bitcoin blockchain, those statements of facts are like A sent money to B sent some money to C. And it's just like a sequence of transactions that are logged and stored. And it's really, 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 really hard to go back and change kind of that history or one of the previous blocks. And that kind of allows for a couple of things. Like one of them is decentralized money, because centralized money doesn't work from a kind of network security perspective. And the second was kind of tied to this, which is like suddenly digital scarcity was possible. And that kind of as an architectural feature in digital kind of in the digital world rather than the physical world is surely just like an interesting concept to be able to play around with. And that was kind of the starting point for me, was like this, like Bitcoin is completely crazy. Like the idea that we can have this like global decentralized money that's going to replace the dollar, like never really believed in that. But as an alternative to gold, yeah, that's kind of interesting when you think about it. Like what are the properties that make gold attractive, and could those be replicated or ported over into Bitcoin? There was like a really small outside chance, I think, in 2012 that might be the case, and the price reflected that asymmetry. And then from a purely kind of computer science perspective, it was just a really interesting new architecture. And it felt to me that like if you took that architecture and generalized it, you could solve a lot of the problems on the internet that we have today. And like that general network architecture was a really interesting one, because it would allow you to effectively coordinate work at scale in a decentralized way. And that's something that wasn't really possible. This was, I'm 32, like I grew up with, there was Napster and Kazaa and BitTorrent and all of these kind of decentralized protocols. There was the open source movement. There's been a lot of kind of different jigsaw pieces kind of coming together, I think, into what we have today. And this really felt like the culmination of all of those.
Something that you said that a centralized money wouldn't work on the internet. Is that what you actually said, or is that what I heard?
No, that's what I said. Like centralized money means that there's like one database somewhere where everyone's balance is being stored. And
okay. And the reason that doesn't work is it's highly susceptible to something like a hacker or something?
Susceptible to a hacker, and by nature, you need to trust the counterparty. the person who like
Okay.
maintains that server. So that's why like when it's a government, that's great because you can trust the government. But creating like a private money over the internet had never been possible because you always had to
Okay.
trust someone.
And
And
then,
there were attempts at this, like DigiCash, created by a guy called Adam Back, but it just didn't really work because you had to trust like a guy with a server at the end of the day.
that makes sense to me. And okay, so you get interested in this in 2013, and what what have you seen go on in the crypto market that has gotten you comfortable with really focusing your career there? Because I think a lot of people, and I think a fair amount of my listeners would say, well, this is sort of a solution looking for a problem to solve, as opposed to something that's really necessary. And as somebody
There's a
who's
lot of truth to
in
that.
crypto,
Yeah.
yeah,
So before crypto, I was a product manager, and like I built product for a living. And the number one thing that you're just sort of that's beaten into you is don't build something and then go look for a customer. Like first start with the problem and then solve it using technology. And an interesting feature in crypto is like we had no product managers for a really long time in our space. You had like hardcore technologists that came up with something really interesting from a technical perspective, which had very little kind of a real world use case and no traction. And they sort of pushed it out to the world. And over time, like these things basically didn't work out. What got me comfortable with moving into the space full time, like 2013, like I thought, this is super interesting, but this is an evenings and weekend thing. If I'm wrong, I'm wrong. It's not like I've put my life into this, but if I'm right, then this is going to be like an entire industry at some point. And there will be a time on a sort of 20 to 30 year horizon where I'll be able to move into the space full time. And I sort of kind of ducked out of the crypto space in 2014 and 15 because at least at the surface, there was very little going on. People had been experimenting with trying to extend Bitcoin, but really it just seemed like it was digital cash. And because it was so volatile, like it's just not a very good cash. And not much was kind of happening from the technology perspective. And then out of nowhere for me, and it was my fault for missing it, but in 2016, Ethereum came out. And Ethereum, which is today the second largest crypto in the space, had really taken the concept of Bitcoin and generalized it, and was sort of exactly what I'd been sort of looking for as a trigger. And it was a trigger for the entire space to really develop. It basically abstracted away a lot of the complexity around building a new kind of quote unquote cryptocurrency or using cryptocurrencies for kind of like real world purposes, in that it provided kind of what we call now like a layer one blockchain on which you could build your own protocols or networks or products or everything like that. And that's what really fueled the 2017 boom, is that suddenly we went from like one narrative and one product, which was sort of like basically Bitcoin and cash / gold, to Ethereum coming and making it so much easier for people to build on top of it, sort of like an operating system for crypto. And suddenly you had 1,000 new coins and 1,000 new narratives and 1,000 new ideas being tried out. And it just attracted a ton of capital to the space, caused this huge bubble. A lot of stuff got funded, the bubble popped, and a lot of that stuff went to zero. But what was left behind was still, if it was 1% of what got funded, it was still 10 or 100 times bigger in terms of like product actually being built, brain power, or like raw IQ points in the space, and funding. Like the back end of that bubble was a very productive bubble, in that we ended up with a crypto ecosystem that was 1 or 2 orders of magnitude larger than 2016. And kind of the story, I think, of 2020, 2021, the bubble that we've seen, has been all of those projects in 2017 that got funded. 99% of them went away. 1% of them were well funded because there was so much kind of venture capital raised during that time, that the venture funds had capital to fund all of these projects for the bear market that lasted like 3 years. And those projects are now coming live, or have been coming live over the past year or so, that are really building kind of like fundamental blocks that you can think of in order to deliver like at scale crypto like products effectively. And a lot of the excitement over the past 18 months has been driven by this stuff actually coming alive.
Yeah, it's okay. So just to take a step back again, you said that Ethereum generalized like Bitcoin in a way, right? Isn't that how you term that? Okay, and what you're referring to when you say that is you're referring to the fact that Ethereum provided a common language, like I'm probably just repeating what you said. I just want to make sure we're on the same page. It basically gave a base layer that people could build upon using the same ideas that sort of Bitcoin was using from like a theoretical perspective of how to approach problems. Is that a fair characterization of what was going on?
Yeah, I'll try and make it a little bit more tangible. You could sort of think of Bitcoin as like two blocks that were put together. The first is this like decentralized secure storage layer where like there's no single person controlling the Bitcoin blockchain and it can just be updated in a secure fashion all the time. And the second is like what you can store in that secure database. And Bitcoin has the security and decentralization piece down super well. But in terms of what you can actually store in this database, you can only really store Bitcoin transfers, like A sent money to B. Okay. And for me, the promise with like Bitcoin was someone who would take Bitcoin and keep that architecture and that security and decentralization, but make it so that you could store anything you liked in the database. And when you have a database, like AWS is sort of a database, a computer is a database, you can also run programs on a database. So it's not just storing static information, but it's actually running a program. And what Ethereum did is it copied the Bitcoin architecture and provided that same decentralized, secure database, but it allowed you to do more interesting things inside of the database. So instead of just storing transfers from person A to person B, you can store arbitrary like numbers and letters effectively. And if you think about Bitcoin, you're just storing like ones and zeros at the end of the day. Here you're storing ones and zeros, but in a more extensible and generalizable way where you can store balances, but you can also store like a computer program. You can store whatever you want.
Yeah.
And like the technical term for that is something which is Turing complete. Like the language in which the EVM, the Ethereum virtual machine, is written in, like the way in which that database is structured allows you to run computer programs like you would on an operating system. So Bitcoin is like a paper ledger where you're like doing your accounting ledger, like money moves from A to B. And Ethereum is like a computer operating system that you can run programs on. And so the way in which Ethereum solved kind of abstracted problems for all of these other kind of startups and new coins that launched on top of it is that it said, we've got the decentralization and the security piece down. You can just write your programs on top of this and run them on top of Ethereum and not have to worry about the operating system layer. And that made it infinitely easier for someone to just come in and build a product that sat on top of Ethereum and benefited from the scale and security of the Ethereum layer, and then like built something on top, sort of like a program runs on Windows.
Makes sense. And then Ethereum, so I own, let's say hypothetically, I own, what is it? Is it an Ether or a coin of Ethereum or an Ethereum coin? How am I supposed to actually refer to this?
So some Ether ETH? ETH.
Okay, so
Ether.
I own some Ether, and then my Ether that accumulates value by charging it's gas, right? Or am I wrong? Is that totally wrong?
I try and like
Sorry
get
if I'm
people
an idiot
to
here. I'm just
take
trying to
no,
get the
you're
basics.
totally right, but I try to flip it around a little bit, and people always focus on the token first, and I try and get people to flip it and think of like what's interesting and important is like the service that's being delivered by this product, and then you try and figure out like
it's theoretically
is the token
an operating
useful?
System, right?
Yeah, so like the product is like it's an equivalent to AWS or cloud computing. like AWS or Google Cloud. They buy servers, they put them in server farms, they run the server farms, and you can go and run your programs on their cloud. The Ethereum is basically the same thing, except that instead of there being one company, like the Ethereum Corporation, that goes out and buys servers and installs them and lets you run their programs on them, it's going to the rest of the world and saying, hey, like you've got a really fast M1 chip on your like iPhone 13, and right now that phone is not being used, and you have latent like capacity on that chip, and people want to run computations, and they don't care where those computations run. So why don't you rent your computation power on your phone to some other guy? And so Ethereum is like a marketplace for computation. It sits in the middle and it connects the demand for computation with the supply for computation. So I can run like an Ethereum miner off my phone. And what that means is random people are going to send me computations to run, and I'm going to run those computations and send the result back to them, and I'll get paid. That's like the Ethereum product and what it does. Now, as part of that, as part of the security for it, there's a token, which is Ether. And the value, I would say, of Ether is, or the way in which you value it, is pretty unclear, because Ethereum, everything except for Bitcoin, is like a car that's driving down the motorway and is being upgraded or fixed as it goes. Sort of like a startup. Like it starts with a product, the product's imperfect, but they keep tweaking it and making it better. And the piece around like, what is this token actually going to look like and how does it accrue value, if any, is sort of still up in the air. So there are certain, like, I think like Bitcoin, and maybe we can talk about Filecoin, there are certain coins where there's a very clear valuation model that you can point to. With Ether, it's not clear. And the bet that you're making is like, it's going to be the dominant, like next computation platform or next big cloud in the world. And it's like massively scalable, and that's probably worth a lot. And who knows how much. That's very much sort of like a venture type valuation, pretty much. So it's incredibly non-specific, but it's very directional. So when something is worth like a few $100 million and you think it could be worth $1 trillion, it sort of doesn't matter if you're off by an order of magnitude. I'd say like when the price is where it is today, it becomes a lot more relevant, and I don't really have a good answer for you. But like the way in which Ethereum is used is, if you want to run a computation in the kind of like Ethereum ecosystem, you need to pay for it using Ether, the token. And it's sort of like a fairground ride. Like if you want to go on that particular ride, you got to buy the token for the ride. You go on the ride, you pay with the token, and then you walk out and you buy your McDonald's in normal cash. And so we call that a utility token. And I don't know
if I don't want to go on
the
ride? No, I'm kidding. You just don't buy it.
Yeah, you don't buy it. Or
I
if
think
you
it's
do,
interesting, right? Because so okay, when I pick up the Twitter machine or whatever, and I see Dogecoin and SHIB and all this stuff, is this on top of Ethereum, or is this other projects going on a different code base, for lack of a better term?
Different blockchain. I know that Dogecoin is. I've never looked at Shiba. I don't know, but I would say like 90% of the coins out there are sitting on top of Ethereum, as a guess.
Yeah. So I guess that I think this is probably true in the 90s. I think it's true of any probably new trend that gets a lot of hot money, and like you referred to it as a bubble earlier. So I don't think I'm going out on a limb and saying that there's a lot of shoddy sort of stuff going on within the space. What do you tell people that have like a highly skeptical, you mentioned Filecoin, for instance. So what about Filecoin makes that project unique versus something like Doge or Shiba or whatever else, that I like? That's the question.
So as with anything,
how do you decipher real from garbage?
Yeah, like as with, I think crypto gets a little bit of a an unfair beating on this because people have crappy ideas for startups all the time. This is like in the tech space, people set up crappy funds all the time. Like there's a lot of, people set up crappy restaurants. Like a lot of businesses start and fail. And I don't know that the failure rate in crypto is any higher than the rest of the world, but it's a lot more public and it gets a lot more press attention. So yeah, just like everything else, 99% of stuff in the crypto space is garbage. How do you differentiate a good project from a bad project? I mean, there's a lot of low-hanging fruit here. Like the lowest hanging fruit is when someone copy-pastes something else and puts a picture of a dog on it and says that this is explicitly a joke and then walks away from the project and does nothing for years with it. That's probably not going to be worth much. And Doge is sort of like
turns out that you should probably buy it.
Totally wrong. But like in terms of fundamental value, I don't know what Doge is a meme. And it's kind of fun and playful and everything else you could say about it. But like it's completely useless effectively. Like it's never gonna do anything except like just go up and down in price. So like that's the really low hanging fruit. And that's gone up for reasons like I don't know. I don't understand. The other extreme is you have like incredibly smart technologists who are trying to build solutions in a way which makes sense. Like they have a clear problem that they're attacking and they're using crypto in logical ways. Like there's a reason why they should use like a blockchain to solve this problem. And typically are well-funded by crypto venture funds who really know what they're doing. These are like sort of ticks that can, give you an indication that this is probably not like an outright fraud. You can go and look because a lot of the work happens open source. You can see this stuff being built like publicly in real time. Like you can just go to the website and go to their GitHub repositories and like you can see the code base. And so if you're technical in any way, like you can sort of see for yourself what's crap and what's not and what might be interesting. You can read the research papers that they're publishing, et cetera, et cetera. So it's very technical. It's a very deep dive, but no more so than biotech. And like there's tons of crap in the biotech space as well. And
yeah,
what's unfortunate about crypto is that everybody in finance feels entitled to a view here. And I've never seen such strong, entrenched and emotional responses to something where the proponent of those views has spent so little time actually trying to understand what it is. It's a very funny thing. I don't understand it, but people have very strong opinions about crypto, even if they've never actually tried to understand what it is. It's pretty complicated technology. Like if you don't know how a computer works or how the internet works, how can you possibly, if you don't know what a protocol is, how can you possibly have a view on a cryptocurrency, which is by definition a protocol? But people do. And so, yeah, like there's also a lot of really interesting good stuff out there, but you need a modicum of qualification to try and pick out the good from the bad. And that sort of gets you in like, let's say the 1% of crypto projects, and then you're like in a bona fide venture landscape. But venture like it used to be, like venture wasn't always about underwriting like Series B SaaS companies who have like a CAC to LTV ratio of higher than 4. Like at some, 20, 30 years ago, it was actually venture capital underwrote technical risk, which is like, if this guy can pull off this piece of technology, this could like change the world or, be very, very valuable in many obvious ways. If you can build a safe fusion reactor in nuclear, like that's obviously valuable. If you can build a rocket that can, launch you up in space and land itself, that's obviously useful. And same with crypto. Like if you can build a decentralized identity protocol that's mathematically and provably true, that's useful. If you can, I don't want to get into the weeds, but like there's a few different things like which are clear problems with the internet today, which if you could solve would clearly be of some value.
I kind of do want to get into the weeds. What's one of these things that you're thinking about?
So one area of like intense research over the past few years is an area called zero knowledge proofs. And this is like PhD math stuff, so I can give you some examples, but I can't go all the way down. Concept of a zero knowledge proof has been around for a very long time, but it's been like devilishly hard to do at scale because it was very computationally intensive to run. Like running one of these proofs, which I'll explain in a second, would take like 100 hours and 50 computers or something. And so they were never very useful. But the concept is, how can I prove something to you without ever showing you the proof? So for example, if you're a bank or a lender, how can I prove to you that I'm solvent without ever showing you my bank accounts or my balance sheet? Or how can I prove to you that I'm David without you physically like inspecting my passport, for example? That would be an example of a zero knowledge proof.
Yeah.
And people have kind of come up with some interesting ways of doing this with providing like a cryptographic proof that something is true without ever showing kind of the working behind it. So one interesting example of a zero knowledge proof, kind of conceptually, would be we're both standing on a beach and I tell you, hey, Bill, I know how many grains of sand are on this entire beach, and there are billions of grains of sand. And you say, well, that's preposterous. And I'd say, okay, and I'm going to turn around and I'm going to tell you to scoop up a handful of sand and count how many grains you have in your hand. And then when you've done that, I'll turn around and I will recount the grains of sand on the beach. And I'll tell you the difference between the two. And you say, well, Jesus, like how the hell did he guess that I had 752 grains of sand in my hand? So you do it again. And you say, okay, turn around again. And you pick up another handful of sand. You count the grains. You get me to recount how many grains of sand are on the beach. And I'll tell you the difference between the two values again. And this time it was 1,272 grains. And if you do that 5 times or 10 times or 1,000 times, you know with basic like statistical certainty that somehow I know how many grains of sand are on this beach and I can recount that. And if we do that exercise,
because if you can tell,
if you can tell the differential,
if you can tell the difference,
exactly,
yes, consistently, then there's a reasonable argument to be made that you know the total amount anyway.
Exactly. And so that's an example of a zero knowledge proof. I have proven to you that I know how many grains of sand are on the beach without ever telling you how many grains of sand were on the beach.
Okay.
So that's, if you take that sort of concept and now you apply it to like underwriting or banks or identity or anything like this, suddenly you can prove stuff to people without them needing to verify that proof. They can just accept this little piece of cryptography, which is like a string of numbers and letters, which looks completely meaningless. And that proves beyond reasonable doubt that what you're saying is true. And that as a like mathematical problem is decades old and was really kickstarted in the past couple years by crypto and cryptocurrency. Like it attracted all of this capital into the space, and suddenly there was 100 or 1,000 times the amount of dollars available for research into zero knowledge proofs, because suddenly zero knowledge proofs are a really important piece of making crypto better. One of these is scaling. And so people always look at like Bitcoin and Ethereum and say, well, it's completely ridiculous. Like you can only do 7 transactions per second. This thing is completely useless. Okay, well, like there's a lot of smart people in the space, and presumably if they're still there, like they've also come across this problem and thought about it. And if they're still hanging around, it's probably because they think that there's a reasonable solution to this. And one of these scaling solutions involves zero knowledge proofs. And when I was talking about stuff that was funded in 2016, 17, that's going live today, specifically what's known as layer 2s, will often be using zero knowledge proofs in order to scale like Ethereum, for example. And so instead of, the way Ethereum works is like you submit a transaction and then everybody has to run you submit a transaction, quote unquote transaction. What that transaction is basically a piece of code that you're asking someone to run. And that's a computation. And a computation has an input and an output. And you send it to like the Ethereum network, everybody has to run the same computation. And then if all of the outputs match, then it's like, okay, this is definitely the correct output. The computation's been run and everyone gets paid. It's just really inefficient because suddenly 1,000 people have to run the same computation. And this is why Ethereum is slow. Instead of that, I could say, hey, everyone, submit your transactions to me. I'm going to run them on my machine, and I'm going to post the output of those computations and my zero knowledge proof, which states with certainty that I did in fact run those computations and that the output that I'm sending you is correct. And that's it. And so there are you can look up, if anyone's interested, like optimism and roll-ups and zero knowledge proofs and scaling. Just Google that. Basically, like companies have come up, or like cryptocurrencies have come and said, you can just submit your transactions to me. I'll run a zero knowledge proof on them, and then I'll post them to Ethereum. And suddenly you can run an arbitrary number of transactions, because I can take 1 million transactions, roll them all up into one bundle, provide one output and one proof, and submit that to Ethereum. And so that's super interesting. And that's one of many different ways that people are trying to scale these crypto networks.
Yeah. So with these zero knowledge proofs, it seems to me that one use case at least could be that rather than having the entire network run one proof, now you can outsource it maybe to a lot of different nodes who can run zero knowledge proofs, and it can speed up the amount of transactions that can occur per second. Or to your point, maybe there's a couple big bundlers that can do it really fast. But basically, a potential outcome is that you speed up the amount of proofs that you can run, right? Which is a key sort of hiccup of today.
The network can run more computations. Like it's the equivalent of scaling up the size of AWS. Like that computing platform just gets bigger and more powerful. And in doing so, a computation is cheaper to run.
Okay, and something that you had also talked to me about in the past was that like the concept of trying to build an internet like Web3 in a manner that almost circumvents like these big monopolistic type trends that are sort of inherent to the current internet, maybe. And one thing that I was unable to contemplate is, won't you always need like AWS's servers? But it sounds as though what you're describing to me is each node sort of creates the compute, and the aggregate amount of cell phones and computers and out there sort of in a potentially ideal world can circumvent the big server farms that we need. Is that fair?
So yeah, like all of your cloud
they probably
stuff
need to be connected to the servers somehow.
Yeah, like it's Ethereum, and Filecoin is sort of Ethereum for file storage. So you can think of like Dropbox and AWS as the equivalents here. But like we think of the cloud as being like all of our kind of data and requests for stuff like sort of go up into the ether and just, get processed and come back down to us. But in reality, you're just communicating with like the nearest AWS server farm, which is, a couple miles down the road. Ethereum is sort of trying to bring it back to what like the cloud was originally envisaged as being, which is literally like in the ether, like spread across billions of devices across the world, all of this latent computing power and storage power on everybody's phones and PCs and fridges and cars, like whatever you want, like all of those should be operating at full capacity. And today they're not. And so if we could access all of that, and we could have a neutral middleman, which is not a company or a government, but is basically like a protocol, which is effectively like maths and software that's open source. Like it's completely neutral and verifiable in the same way as the internet is. It's also permissionless, like the internet. Like you don't need to ask for anyone's permission to go on the internet or to send an email. You just can. And so like that's something that all computer protocols generally are, or at least open ones are. And Ethereum is like an open computing platform for the world that runs on every, or could, like if this works, will be running just on everyone's devices everywhere. And that's kind of the grand vision of Ethereum. And so when we think of kind of
what do you think
Web3, which is sort of like the next evolution of the internet, like we basically went from what I would call kind of Web 1, which was a very static internet. You had files that were stored somewhere and you could go and retrieve those files. So like you could go and retrieve a web page from a static web page from a server. So like the equivalent today would be loading up a Wikipedia page. The page basically never changes and you go and you retrieve it. And that was kind of the early internet, or like I send a file to you, Bill. And then the kind of second stage was more interactive. So this is like Twitter. Like I can go and I can not only consume a Twitter feed, but I can like something or retweet something. And I can hail an Uber and I can see the Uber driver moving on the map in real time. This is a much more kind of interactive, streaming Netflix or recording and streaming this podcast. That's kind of Web 2. And what happened in kind of the history of the internet is that it started out, extremely idealistic people who wanted to free information and make information free to everyone, et cetera, et cetera. And what happened is that information got centralized into a few key players, basically FANG today. And it turns out that owning the data layer, like owning the data, is really valuable, and you can monetize on top of it, and you can build network effects around it that solidify your position and aggregate the data to yourself. And the data layer was the major kind of choke point in the internet that allowed companies to go and centralize it and then monetize it. And what's interesting in crypto is, if you remember to how I was talking about Bitcoin and then Ethereum, that all of the data is stored in the blockchain, and the blockchain is public, and it's sort of decentralized and freely available and not owned by anyone. And the paradigm shift, if it happens like I think it'll happen with Web3, is that people's data will be owned on a blockchain, sort of kind of communally, and using things like zero-knowledge proofs, it will also be private. And then the apps that we think of today, the Facebooks of the world, will sit on top of the data and only be able to interact with the data because I give them permission to interact with my data. And that's a individual first, privacy first vision of the internet, which is only possible today with blockchains. There is no other way that we know of to enable that. And so that's kind of one of the big promises kind of Web3 is giving people ownership of their data again.
So in that world, would Facebook then have to pay the blockchain like a tax in order to use that data? And is that where the coin sort of gets its inherent value from?
So Facebook would have to pay the blockchain for access, sort of. But most importantly, it might have to pay you for the access.
Yeah.
Right?
Yeah.
In terms of the coin, you can sort of think of...
Or the collective you, right? And then you got to break it out because
like
my
literally
data alone probably isn't worth much. But but I'm saying like in order for the data to have any value, you have to be part of a group that opts into giving the data or something like that.
But you could tie the monetization of your data back to a price, potentially. I don't think the price would be very high, but like you can sort of think of a phone.
This might be depressing. People find out how little.
Well, exactly. Worth. You're worth like 10. If you're in the US, maybe you're worth $50, but like, people are worth like $3 to $10 a year kind of thing. I think is like ex-US kind of the going rate for someone's data. If you look at like how much Facebook is basically able to monetize your data, what a user's worth. The kind of concept that I find interesting that I feel is kind of useful for people is if you think of your phone, like you've got a really good processor in there and you could rent that processor out to people whenever your phone is plugged in and not being used. So screen is locked, phone's plugged in, switch on the like renting of my processing power. Okay. I have 60 or 100, I don't know, I've got 128 or 256 gigabytes on my phone. I probably use like 50 of them. So I've got like, call it 100 gigabytes of free space on my phone. Why don't I rent that out as well? And I've got, you know, a 40 gigabyte bandwidth with my service, with my like phone provider that I may or may not use this month. And so, well, I could rent some of that bandwidth out as well. And you start to like piece all of these different revenue streams together. And like maybe I rent my data to Facebook or whatever so that it can target ads better. But if you start to piece all of those things together, maybe you have a phone that sort of pays for itself. If you have a phone that pays for itself, maybe you can give high quality phones with high speed broadband to the developing world. And what use cases does that open up? And so I think with crypto, like what's super interesting, I think the kind of first order effects are really interesting, but it's the second order effects that really blow your mind. Like when that becomes possible,
all right,
what
so
things
blow
does
my
it
mind
unlock?
with some. Let's go down this path. What's like one of the real mind shattering conclusions that you came to of where like you think the world is almost certainly going to go?
So like one of them is like basically if resource utilization gets better, like everyone is going to have a high speed phone with data on it, and it's going to kind of be unlimited. And that probably enables a bunch of things because there's still actually a lot of people in the world that don't have smartphones. The other one is around debt. Like if we can make the issuance of debt fully programmatic and reduce the costs of fraud and administration basically down to zero, kind of what does that open up? Like if you can make microloans, you know, lending like $10 profitably. If you can lend $10,000 with, you know, cost of administration and underwriting, which is like near zero. What does that unlock? Inventing new types of, you know, if we look at, so one of the big things that has been built on Ethereum is something called DeFi or decentralized finance, where people have been rebuilding financial products in like crypto land. And like, that's also really interesting. Like that's kind of starting to look like everything you could want from a bank, but all in crypto where you basically own all of it. Like what does that unlock? I don't know. It's all very kind of wishy-washy, but as we saw with the internet, like if you have a paradigm shift in the architecture that can fuel decades of innovation. And I think that there has been for years a critical mass of smart people and money in this space, such that like world-changing stuff is going to come out of this. And if I could bet my net worth on that, I would. The question is like, what is going to be life-changing out of the thousands of experiments that are basically being run right now? And, you know, where is the value going to accrue in this new stack? In the previous stack, the stack we're in today, you know, the value very kind of obviously accrues at the data layer. Like if you own the data, you can monetize the hell out of that. It makes for better user experience, which means users come to you, which means they give you more data. More data makes a better user experience. You have a flywheel. And now you have like Google with a 90% market share in search, which is just amazing. But if the data layer gets made public, like the corporate kind of gets, in today's world, just gets reduced to an interface. And now they're just competing on who has the better interface that sits on top of your data. But like the experiences that they could give you as a user are equivalent. It's just like who can build the better UI or user interface on top of this shared data layer. And so that's like really interesting. But the question, I'm a big believer in kind of swings and roundabouts and pendulum swinging, both in markets, but also in tech. Like we go from systems that are open to closed, as people figure out the new choke points in an industry. And there will be new choke points in crypto. And I think we are going towards, like, this pendulum has swung from like an extreme of centralization, swinging back towards decentralization. Things are going to be very open over the next decades. And that will be, like, the direction of travel will be towards openness and decentralization. And then just as quickly as that's happening, suddenly people will find new choke points. And I don't really know what those choke points are going to be, but I'm sure that that's the, like, rough outline of what happens.
Dude, I don't know. I'm obsessed with these silly Bored Apes that people have on the internet.
I don't know.
And
I don't understand it.
Well, so here's like a version of the world that I think is honestly more likely to occur than not at this point. Like I like Zuckerberg's big metaverse announcement or whatever, I put it on the map, but I really think that there's going to be a part of our lives, and probably an increasing part of our lives, that is some sort of blend of virtual reality, augmented reality, and reality as we currently understand it, like in the physical world. And I view it as almost inevitable. And I guess the thing that I like, I said recently, I said, I'm either going to pay a lot of money for these apes one day or nothing. Mm-hmm. Right? I don't know what it is, but I'm going to own one of these damn things, like I do baseball cards now. But the reason that I think that it could be a lot is I think that there's a world where this digital ownership and digital scarcity actually is able to be shown to your eyes as if current scarcity is, or, so there's a world where there's a virtual Louvre that you can go into, and like maybe these apes are actually one of these projects that is seminal in the internet becoming ownable, or digital scarcity actually being able to be like it's a tangible. I guess it's not tangible per se, but it's like the first manifestation of this idea, or at least a community that I've sort of seen that way. And maybe over time, the person that owns the ape, has the right to extract rent from some digital museum that people pay to go into. And I think a lot of people right now kind of say, well, that's stupid. But like, I'm almost convinced that's where the world is going. And I think it's the concept of being able to create digital scarcity is like super, super interesting. And that's why I think people that are really not thinking about this stuff because they associate it with, well, Visa and MasterCard already have this solution, so this is redundant, or this is a solution looking for a problem, therefore it's got no value. My mind just says yet, right? Like, I think someday there will be value. I just don't know how to articulate what it is and what it will look like.
I agree.
Does that make any sense?
I agree with everything you've said. I don't know how much I can add to it. Like,
I mean, maybe not the apes, right? Maybe that's the wrong example, but I'm saying the movement represents something that is big to me.
One of the things I've learned through painful experience is, like, when something gets so stupid and crazy, when you think something is like stupid and crazy, and then it gets 10 times more stupid and crazy, it's generally not actually stupid and crazy. Like, beyond a certain point, you're probably missing something. And I thought it was like, so CryptoKitties is at least the first NFT project that I know of. Like, they released a bunch of like kitties, and they look a lot like Bored Apes.
Yeah, I actually remember when those came out.
And I was like, well, that's fucking stupid. And that was it. And then like CryptoPunks came out, and I was like, so, early 2021, this stuff is really blowing up. And by like March, it had gotten so big that I was like, okay, like I've definitely missed something here. this is too big and there's too much money flowing in for something interesting not to come out the back end. And I'm going to wait for this to blow up, which will happen in the next couple months. And then I'll circle back with all of the founders of all of the best projects, and like their tokens will be in the kind of dumpster and no one will want to talk to them anymore. And this is like the bear markets are just the perfect time to go and learn about the crypto space, because you have access to everyone and they will talk to you because suddenly no one is talking to them or interested in them. And I said, like, I'll let this blow up and then I'll do my work. And I wish I'd done it before. Like this NFT space just continues to explode in a good way. And so at this point, I'm sort of sitting back and saying, something is going to happen here. And I don't really get it now, but I'm sure as hell going to be doing the research when the whole thing calms down. And like on a long time horizon, completely agree with you. Like, and I disagree that we can't call these things tangible. Like so much of our social and economic lives is already on the internet, not to mention political lives, is already on the internet and already intangible in a kind of physical or non-physical way. You can have something that's digital and tangible. I think like more and more of our lives is going to move onto the internet. Like that's just going to happen. The question is like at what pace and where does the value accrue? And on the pace, I think it's a long way off. I actually just ordered an Oculus again because I bought one a couple of years ago and it was just crap and there was nothing to do on it and I was super underwhelmed. And so I've bought one again and I'll just like have a play kind of for a weekend and see like what can you actually do on this stuff and how good is it?
You got to get super hot. The game Super Hot is incredible.
Okay.
And then you got to get the boxing game, Thrill of the Fight, Super Hot. And then I haven't watched Oculus TV in a long time. I've been on YouTube TV, the VR, but the Oculus TV wasn't set up for a while, and I just kind of never went back. But dude, that thing changed my entire perception of how inevitable this, like what I think
I'm hoping for
to happen is. Yeah.
So is it that
is Zuckerberg the one that wins? I don't know.
Like, yeah. But can you like see that like this product has so much promise when you're using it, and you can actually be like, wow, like we're actually getting that where this is not crappy.
I think it's inevitable. Like, I don't even think it's debatable that we're going to this. Now,
I totally agree, but it's like now or in 20 years?
Do we spend? I don't know. 5, 10?
Because like, how long does it take for the tech to be mature enough for this actually to be usable? Is sort of my question. And maybe it already is.
For what? Right? Well, I think the question's for what. So I think that we are there. Where you can already make business presentations over an Oculus and have somebody experience many, if not all, of the experience. I think you need a very, very competent content team. I know of a company that's trying to do it, and I think that they're doing it reasonably well. I think they have a long way to go. But I mean, this is what I think Zuckerberg's pouring billions of dollars into. You talk about the creator economy. Like, why can't you and I be basically looking in a screen right now and it feels like we're in the same room? I don't think we're very far from that. I just don't know that the tools are distributed enough to get there tomorrow, right? But like in the next 5 years, 100%.
Cool.
Now, is that going to be every business meeting? No, I don't think it will be. But could it be introductory meetings? Could it be follow-up meetings? Could it be all that stuff? Yeah, I think it's certainty. And I don't know. I don't even know how somebody would take the other side of the argument and also be paying attention to what's going on. But I accept that my confidence interval may be too high.
My big question on it is the timing piece. Like if you're actually going to go and invest, because if you're off by a few years, that's a zero.
Yeah,
probably.
Well, this is not an investment discussion. Yeah. This is more of like I truly think the world is going here discussion.
Totally agree on it. But yeah, I think it's interesting. And looking at like I don't know, I've got a 10-year-old godson and like games are social to him. he goes and plays Roblox with his friends, and like they build games, and him and his friends go and watch other gamers gaming on Twitch. And this is something I didn't do as a kid.
Yeah.
Like that's insane.
I was reading to my kids. I was reading. They're into Minecraft, and I kind of like it more than Roblox because I think it's a little bit more contained. I also like to kid my buddy Francisco. He's long Roblox. I like to tell him that he's long child pedophiles. But, that I digress. It could be the same on Minecraft for all I know. But I'm reading this children's book to my kids. And the book is about 4 kids who go to a beach, and it's a Minecraft beach, and they're attacked by a monster, and how they feel when it's all going on. And then, they get through this battle on Minecraft, and then the next chapter, right? That's chapter 2 or whatever. Chapter 3, they're back at school talking about putting on their VR headset again and going back into Minecraft. And it's like, I just, once it's in children's books,
wow,
and my perception of what Oculus already is, like, it's going to happen.
It wasn't a children's book.
It's like Ready Player One, only not that. Yeah. It's just not dystopian, right?
Yeah.
It's not the dystopian world that exists in Ready Player One. Maybe people do this stuff on their Peloton treadmill. Maybe it's like really high class, and these, I think the hardware has to get lighter weight. But like, I already do this shit on Twitter, right? Spaces is a version of it. It's just, there's no vision in the version, right? It's a group meeting place where people are coming together and speaking. You're just going to layer on visuals to it.
Yeah. I guess, like, bring it back to NFTs, like, just look at any luxury company and tell me that social proof isn't a real thing. And if you're going to spend time in a digital world, like, you're going to pay for stuff, as crazy as that sounds. It's going to be really
now, are the current prices inflated? Like, are the current prices inflated by people trading their own stuff? Yes, I admit there's a lot of stuff going on, and there's probably a lot of fraud and whatever. But fundamentally, the concept makes sense to me.
It's not even fraud. It's like someone is releasing a bunch of JPEGs and being like, go for it. And then it just gets bid up to the moon. Like, they're not like fraudulently misrepresenting what this is. There was a big NFT project that was like, it was like 2 lines, like it was 10 random words, white on a black screen, and they just like minted these NFTs and you could trade them. And the idea was that like people would take these 10 random words and like build a story around them or something. But like someone just hit a word generator and like made 10 words per black, like 100 by 100 pixel kind of image, and just sold them. And they're worth tons of money, or they were. It's not fraud. I don't know. I think it's just a terrible purchase, but like, it's not fraud.
Yeah. All right.
Yeah.
So
anyway.
Let's go back to what you do. Would you trade something like that, or would you outsource capital to people that do trade something like that? And if so, how do you make sure that you're not getting caught with vaporware at the end of all of it? Or
so like
just
everything
sort of worthless trading sardines
that I do professionally is market neutral and like non-directional. So we don't have, in the types of trading that we do, we don't need to have an underlying view about whether the assets are fundamentally like going to change the world or are trading sardines. The only thing we really care about is the underlying liquidity. And then it's as simple as when the prices diverge, you can buy it at one price, sell it at another, and pocket a spread. So we trade top 50 assets. And among those are some things that I consider to be completely worthless, like Ripple and Dogecoin. But there is a demand for liquidity, for example, in Dogecoin. And there has been enormous demand for liquidity in Dogecoin in the past few months. And like there are swaps and futures linked to Dogecoin. And the price of that swap can get way out of whack with the spot price. And so you can like buy the spot and sell the future, which is selling at a premium. And then you can just wait for that future to expire and collect the vol on it. Like that's a super simple like fixed income arb trade but the spread can be crazy because like suddenly everyone wants to buy Dogecoin with leverage and like the future just goes nuts. And you can do the same on Bitcoin and Ethereum and whatever you want. Like the underlying value of Dogecoin is never a factor in a trading decision like that. It's just like, can you get in and can you get out, and can you not blow up on the way? So it's very much kind of high frequency trading type of mentality.
So one, I think the answer is you close. I think high frequency is the answer to some of this, but how do you mitigate counterparty risk?
You diversify and you try and stay on top of what's happening and come to a reasonable assessment of the risk that you're underwriting, and make sure that if you're trading on exchange X, like there is a reasonable expectation of profit that's commensurate with the counterparty risk you're taking on.
Because so in your Doge example, for instance, right, to just like make this simple, because I don't know that these conversations get into some places that people need some explaining. So Doge, you said in one sentence, it could be worth zero. And you also said you would be willing to be long it in some sort of arb trade. So what I'm hearing you say is, I go long Doge, I am short the future immediately.
Yes.
So you basically lock in your spread. It's the time you're getting paid for the time value of money, right?
Yeah.
When the future contract is at expiration, you know you can exit a position to the buyer of the future, even if the underlying is worth zero. You are owed money on your contract.
That's correct. Yeah.
Correct? Or
no, that's totally correct. Like you're long with one hand and you're short with the other. So you have like long one Dogecoin, short one Dogecoin, but the short that you sold is selling at a premium. And so like at expiry, you're always neutral on Doge. Like it can go to the moon or it can go to zero. You don't lose anything to the beta of where Doge goes. And the one thing you do, like the only exposure you have at that point is to that spread and to the counterparty risk.
And the counterparty in that instance
is
the exchange.
Yeah. So exchange counterparty risk is exchange counterparty risk is like the largest risk exposure I think that you have when you're trading market neutral in crypto. But I think counterparty risk is generally overpriced from a risk perspective. When you really like sit down and think of these exchanges and the contracts that you're trading and stuff, your risk of like total capital loss, I think, is much smaller than somebody who doesn't know the space might assume, because you have like multiple layers of waterfall between you getting wiped out and something bad happening. So I don't know. Is that like interesting for you guys? We can go kind of like, okay.
For me, it is.
So
let's do it.
Take an exchange. It's offshore, like it's regulated in the Seychelles or some jurisdiction like this. So, basically unregulated. It's not audited. You don't really know much about it. You don't really know who you're facing. I mean, you sort of do, but, it's not like facing the CME. So you say, well, Jesus, like it's a coin flip. Like they could just run away with all of the money. And so you kind of look at it and one of the things you can say is, well, what's the trading volume on this exchange? And there's, the exchange tells you what the trading volume is, but of course you can't trust the exchange. So you need to come up with your own assessment. And if you're trading in size on that exchange, it's very helpful to you because like that kind of volume can't really be faked. And so if you can see with your own eyes that the liquidity is really there, you can come up with a reasonable haircut to apply if you think the exchange is lying to you in terms of volumes. And then you can add up all of that volume and you can look at the trading fees for that exchange and you can say, okay.
And that's because, just real quick, just so that I fully understand what you're saying. If you can get in and out on an exchange in size, you prove out, like without really moving the bid ask or whatever,
pretty much,
prove out that there must be some depth.
Exactly.
It's almost like the negative proof that we were talking about.
Yeah, earlier. Like there are actual buyers and sellers of this coin that you're trading. And you can talk to other market participants.
All right, I'm sorry to interrupt you on a thought process.
So if you're trading full time, like you're talking to a lot of people and they're also trading and you try and triangulate from everybody's perspective, like, is there real liquidity here? Now, if there's real liquidity there are fees associated with the trading. And so you can sort of spit out like a rough estimate of how much free cash flow this exchange is printing each quarter. And then you can triangulate that number with what you're seeing if you have access to it in terms of the private market valuations of companies like Kraken, and then the public market valuation of companies like Coinbase. And if you can sort of come up with a number that's fairly reasonable and well triangulated from different angles. And you start to look at an exchange that's unregulated, offshore, all of this stuff, and you go, well, Jesus, like, these guys are printing like 200 million in free cash per quarter. Like, this is a real business. And if so, like, my first kind of conclusion there is that there is a basic incentive for them to keep this going. Like, this is a real gravy train. So yeah, sure, they could like shut the exchange and run away with all the crypto, but they could also just run a legitimate business and get very, 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 very rich very quickly. Like,
there's also
everyone who is like, who founded an exchange is a billionaire at this point. Why would you go through the trouble of stealing, another few billion of assets off the exchange and being like hunted for the rest of your life? So like, there's a reasonable kind of supposition that these guys are not just going to run away with the assets. The next thing is, if they did, the cash is easily trackable. Yeah. The crypto is, like, they could run away with the keys, but how are they going to liquidate the crypto? Because if the founders of Exchange X like run away with the crypto, remember, all of this is like an open public ledger. Everyone knows what the addresses are. Those addresses will get blacklisted. And it's not like they can take 10,000 Bitcoin and just cash out for $6 billion, if I've got my maths right, on like Coinbase or something, because Coinbase is going to say like, this Bitcoin in this address is red flagged as having been stolen from the users of Exchange X. So suddenly it just becomes really difficult and tiresome for a billionaire to try and liquidate that additional few billion. So like, even if you did run away with the money, it's kind of hard to actually like move that into cash that you can use. So that's the next point.
Yeah.
And then after that, like, you start thinking about hacks. And, one thing is the track record of the exchange. So like BitMEX, for example, is a much maligned exchange. Like, the 3 co-founders have been sued by some branch, some organ of the US government. And I think 2 of them are in custody and 1 of them's on house arrest. Like, but the exchange itself has been running for like 4 or 5 years at scale, and it has never been hacked. It also doesn't touch fiat currency. And it's like, okay, well, like, that's a pretty good track record. It's always worked. It's always sort of like honored its debts or whatever. It's never run away with the money, and it's never been hacked. So that's one small indication that, maybe it's a reasonable bet if I can make 20, 30, 40, 50% on this exchange per year. The next is, the bigger the exchange, the more of its assets it can hold in a cold wallet versus a hot wallet. And these are 2 different kind of types of crypto wallets, but basically a hot wallet is quite easy to hack, and a cold wallet is basically impossible to hack. And the bigger the exchange, the more the inflows and outflows can be netted. And so if you're a big, like, top 5, top 7 exchange, I would guess that 1, 2, 3% of your assets are stored in hot wallets at any time. And most of it is in cold wallets, and those cold wallets are very secure. So if they do get hacked, which is kind of the next attack vector, sure, like, maybe the hacker is going to run away with one of these hot wallets, and the assets are split across a bunch. So if they hack one, we're talking about like basis point type loss to the exchange, and the exchange is making 200 million, so they're probably just going to make you whole. Now, if they hack all of the wallets, still we're talking about a couple of percentage points. And there are examples of exchanges that have had enormous, like, multi-$100 million hacks who basically went out to the market and like issued a token that was basically debt with interest, and people bought that debt. Like Bitfinex did this in 2019, I think. They issued like $200 million worth of debt basically to the market and said, we're going to pay you like 50% of our revenue for like 3 years and make you whole. And, this is this might return your principal and more, basically. And they raised that money in I think it was less than a week from the hack, and they made everybody whole. So they have big balance sheets. They have the ability to raise large amounts of capital. An exchange called Deribit did this during March. They nearly went broke because there was a ton of liquidations, and they just raised the money, but this time from venture. Okay, so if there's a couple percentage points of loss here, you're probably going to be made whole. Now, if you're not, these exchanges have insurance funds, and basically a portion of every transaction, to simplify things, goes into this pot, this insurance pot. And if something blows up or there's an issue, you pull assets out of the insurance fund to make the other side of the trade whole, oversimplifying a little. So you can see the size of these insurance pots, and in some cases they're really, really, really big. And so that gives you more comfort that there's some kind of cushion before you, the user or the client, is actually getting hit. And then if you blow through all of these layers, the loss is probably going to get socialized. So we're talking about, 1, 5, 10, 20% loss on the capital that you have with that exchange, on which you're hopefully making more than double-digit returns. And your counterparty risk is split across 5 or 10 or 15 different exchanges. So when you start adding all of these things up, I think your counterparty credit risk should be maybe in the 5 to 10% range for the major unregulated offshore exchanges. And what's interesting is that we now have prime brokers in the space that are starting to come out, who are lending you assets that you're going to go and trade on the exchange. And as part of that, it's their ass on the line if the exchange blows up. And so these guys are giving you a little bit of signaling power as well, because you can see in their pricing, the cost of dollars to them, but then the exchange counterparty credit risk that they are explicitly having to price. And it's low single-digit percentage points. And the returns available in the crypto space are higher than that. And there is sort of this, I think, imbalance. And this is why I say I think counterparty credit risk is overpriced in our space. But you really have to know what you're doing.
And when you say this is not for amateurs. When you say the returns are double digit, you mean the arbitrage?
Yeah, sorry, market neutral arbitrage type returns that you can extract from the market.
Yeah. That's wild, man. You ever worry that people are going to jump in there as pros and suck all the arb out?
Yeah, I've been worrying about it for 4 years. But so far, so good.
Well, maybe you shouldn't do a podcast. I like how you think about that. I guess somebody that I respect a lot has just sort of released a Coinbase write-up, and I haven't gone through it, but I will. And one of the things that I wonder about is, will the volumes on all these exchanges just sort of explode? And how do you, and when I say explode, I don't mean to the upside. I mean, collapse, right? And I guess that I had a discussion with somebody who kind of has me convinced that crypto assets are sort of the new asset to trade, which is not how I like to look at the world necessarily, right? Because I prefer to own interests in businesses, but I'm not sure that I think that my fear of the idea of the trading on these exchanges going away is maybe misplaced a little bit. Potentially not, right? I think it's.
I ascribe to the Matt Levine's boredom market hypothesis. People want to trade when they're bored, and it's.
What's that?
He basically that there's a link between boredom and trading. And if we look at what's going on in the stock market and crypto market, generally most markets that retail have access to, a lot of it can be explained by the fact that people are just bored in a home. And he has this wonderful write-up in one of his daily letters which is just kind of a hilarious kind of explanation of the boredom market hypothesis. But yeah, like, I mean, unambiguously, people like to trade, and they don't seem to really care what it is that they trade. And crypto is global. It's unregulated in a bunch of places, regulated in some. It's tradable 24/7. Now, all of those, it's volatile. It has like these extraordinary narratives around it, boom bust cycles, lots of excitement. Like all of that makes for like a wonderful substrate for like entertainment trading, without like passing any judgment on that. I think your friend has a point there. I hope that the crypto space is going to be more than trading sardines. I think it will. But undeniably, a lot of volume today is people punting on stuff, in the same way as they do on stocks and options and everything else, CFDs, whatever. And so, like, with that said, we have very, 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 very clearly seen that crypto market volumes like go up and down with the price. And in the bear market in like 2018-19, volumes were down like 90%. And I am sure that we are going to shoot way above to the upside. This is going to be like my fourth bull cycle. I don't see why this one's going to be any different. There are people saying that like this time the institutions are here, so there's going to be no bear market. I just don't think that's true. I think institutions can be just as dumb as retail.
The institutions,
and they can FOMO just as much. And
yeah, they haven't exactly. They haven't stopped bear markets and things like stocks in the past, so I don't think that they're going to be able to stop it in crypto assets. That seems flawed.
A lot of people ascribe to this. I don't agree. I think like we're going to have a crazy, crazy run up. It's going to go way too far. Maybe it's already way too far. Who knows? And we're going to have an equal and opposite collapse. And the volumes on Coinbase, I think, will track that. And the revenue is going to be very volatile on the kind of trading fees side of things. That being said, on a like normalized through the cycle kind of basis, it's just an incredible business. Coinbase is an extraordinary business. Like they have got like a chokehold on US retail trading, and they can charge them enormous trading fees. Like if you sign up for a Coinbase account and buy some Bitcoin, I don't think it's changed. And like in a year or two or five ago, like they were charging like 2.5% on the way in and 2.5% on the way out. Like it's just insane. That's a wonderful business to be in. All of your costs are fixed. So it's an interesting company. I think exchanges, there was one venture fund out there that was betting on exchanges in like 2014, 15, 16 called Pantera. And they did incredibly well on exchange bets. But today, I think everyone sort of realized that exchanges aren't actually terrible businesses. They're actually pretty fantastic businesses. And they're probably getting priced appropriately. But the variability in that revenue.
So this is going to sound
might mean that like those investors. Yeah.
This is going to sound really stupid, but like, what is who does Robinhood route Bitcoin trades through?
I don't know.
Or
so
Doge.
Right. Yeah.
I guess Doge was the primary driver of revenue.
It might be. It might be Virtue now.
Work. Crack open a 10K and
like Virtue's in crypto now. They'll go and buy spot for Robinhood. Maybe it's Virtue. I don't know, but I'm sure that's public. So you could find out.
Yeah, I am too. I just haven't. I can only do so much research on Robinhood before I get too upset and I put it down. But that I digress on. So what keeps you up at night about your business and about what you're seeing in the world and whatnot?
I think we're kind of past I worried for a long time that, the space would go away. I think the last bull run and the last bear market that we had, sort of the 2019 bear, I thought at the time was the last time that we would debate whether crypto was even a thing. And the debate was, is it worth nothing or is it worth something? And I think we're kind of past that at this point. Like we've definitely hit that tipping point. And the debate for the next bear market is going to be like, how much is it really worth? And that's a very kind of different place to be in when it's your like career and you work in the industry. So I don't really worry about crypto disappearing. I think that every venture fund I know is 2 or 3 times oversubscribed, and they've all closed funds that were, upped in size. There is more than enough capital locked up in venture funds today to see us through the next like 4-year bear market if we have one. Like any high quality project in the crypto space in the next 4 years is going to get funded. So that's kind of from an ecosystem and industry perspective, that's great news. And I sort of like, my mind is at rest from that perspective. In terms of the things that I do worry about, counterparty risk is one. Everyday kind of trading risk is obviously another. And I worry that like volumes will dry up. And in what we do, like we really benefit from large amounts of volumes and volatility. And as with any market neutral strategy, if markets are doing nothing, if the time structure is doing nothing, if nobody is crossing the spread, if there are no volumes, then it's just really hard to put large amounts of capital at work profitably. You sort of just sit there, maybe eking out like an adequate return, which, on a net basis would already be an achievement. And we do get these periods. We had one the last 6 months of 2019. We had one sort of like May through August. There was sort of very little to be done in market neutral world of this year. Now, markets have really picked up, but if I'm correct in that we're going to have this huge blow off top, but the backside of that, sort of once everything is settled down, we might just sort of be sitting on our hands trying to stay out of trouble for quite a while. And those periods tend not to last much more than 6 months, but trying to stay disciplined during that kind of period is something that's kind of on my mind. It's like, how am I going to keep myself out of trouble when there's just nothing to do in the market? It's almost like you got to do a copy and just take a holiday.
Dude, this is you have good company, because Buffett says the same thing, right? When he has a lot of cash and valuations are a little bit high, that's when he gets worried about making a mistake. So you're not alone on that. Well, so, I think a logical question, to ask you is who, who are you looking for, and who can you help sort of allocate? Because I haven't come across many people that do what you do. Market neutral and crypto.
It's a niche within a niche.
Seems like an uncorrelated asset to me. Yes, that's right. So like, how do you find, investors, and who are you looking for? Who should be looking for you?
So I guess like the main reason I do these pods, apart from getting to hang out with you, is just sort of as a PSA, like if you're a trader in the crypto space and you're doing something interesting, we would love to talk to you, and maybe we can allocate some capital. But yeah, we're always on the lookout for people doing interesting stuff in this space, especially when it's market neutral, high frequency, high sharp, these kinds of strategies. In terms of like our investor base, I'm lucky to be for the crypto space, relatively big and well-established firm. Like we're FCA regulated. We tick a lot of the institutional kind of boxes that people might have. And we've got a wonderful kind of fundraising team who speak to family offices and institutions more and more around the world. And I'll leave it there for regulatory reasons.
Sounds good. So if anybody wants to follow up, how can they contact you, and where?
So I'm on Twitter at Fauchier, DFAUCHIER, and you can always email us at like my name dot my last name at nickel.digital, or look at our website, which is nickel.digital as well.
All right, man. Well, I think we've given people a lot to chew on in the conversation one. I hope that you will come back. If you are correct that there's a blow off top and then there's some sort of like lull, perhaps you'll spend some of your time talking to me and giving people an update on the markets, and that may preclude you from doing something silly.
Perfect. Let's do that.
All right, man. Well, Thanks it was great talking to you. And David Fauchier, thank you very much for stopping by, man. I appreciate it.